The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
All right. Good afternoon, traders. Welcome to the hump. Welcome to the Tradespoon live trading room, stocks and options, closing bell. My name is Scott, and I'll be your host. I'm the head trading coach here at Tradespoon. For those of you who don't know me, if you are newly attending, definitely reach out, say hello, introduce yourself. I would love to hear from you. Hello, LK. With the VIX elevated, what put would you consider? Okay. Not yet, but we'll talk about that. Good afternoon to you, Dennis. Wonderful, wet, and windy Wednesday. That's a good one. Yeah, if you're anywhere in coastal areas experiencing adverse weather conditions due to the hurricane, I hope that you stay safe, stay dry, etc. Good afternoon, John. Good to see you. Greetings, Bill. Glad you made it in okay this time. Good to see everybody. Numbers are light still, part of the crazy market that we are experiencing right now. But what are you going to do? I know what we'll do. We'll do the best we can. All right, let's dive in. This is me trading for over 20 years, teaching for almost 20 years. I need to remind you about the disclosures. Trading's risky. You may not have known that. Options especially. We're not advisors. Be careful out there. Have a plan. Manage your risk. Know what you're doing. Yada, yada. Okay. The abridged disclosures are my favorites. Whoa, we talked about, was this going to be the day that starts the bounce? What are our thoughts about this? And bam, look what happens. Weakness in the dollar, oil's up, stocks are up. Did anyone watch any of the speeches? Any of the Fed speak? I didn't. Bank of England stages dramatic bond intervention to help take the pound, the British sterling, off of the all-time lows. So they went from quantitative tightening to quantitative easing, and that seemed to help. But man, look at our moves today. S&P up 2%, Dow up almost 2%, NASDAQ up 2%, Russell up 3%. I just was looking at this, so I'm going to jump to it, and then we'll come back. Look at this beautiful green, except Apple still down 2%. Who's this? VFC Apparel Manufacturing. I don't know anything about them. Down 3%. Align Technology down 2.5%. Exelon Energy down 1%. Who's this? Skyworks. Woo, man, we turned green. So we said if there's going to be a bounce, we thought it might be off of the lows, the June lows. We were there for 4 days testing support, never got through. And now we seem to be bouncing. So the question is, are you going to trade it? I had a few people say yes this morning. I had almost an equal number of people say no. Great. I'm not going to say you should do one or the other. If you're looking to trade bullish, it should be now. It shouldn't be wait for 3 more days and you're like, oh, it's going up. Let's get in. It's like, no, you missed it. That could be it. It might only be 3 days or 4 days. We're still in a short-term downtrend. If this thing goes up 3 or 4 days, loses volume and rolls over, absolutely, I would be concerned and speculating to the downside, right? So, yeah, there you go. BlackRock, we shun most stocks. Do you? We shun most stocks. We turn our nose up at most stocks and poo-poo them. Oil prices jump. We talked about that. Food crisis caused by conflicts, climate, and the maldistribution of something. What else? I think that's about it. I think that is about it. Corporate home buying spree backfires. Okay. That's about it. All right. Well, let's look at the economic calendar. We looked at this morning if you were here. For those of you who weren't, we're going to just take a quick peek at it again. Where am I? Let me go back here to September the 28th. If entry today with small profits, do we tighten stop and go another day? Decide on close based on lift or decline, or something else. Honestly, if you entered today and you have small profits, I like the. We'll look at it. The volume's pretty good. I mean, we still have another 45 minutes. Right now, we're at 72 million, 88 total. I think we'll get above average. I don't know if we'll get quite this high, but I think we'll get close at least. So maybe 100 million. So we'll be above average volume, I bet. No, maybe not 100. 72. 90 million? But that definitely looks like what we've been looking for right there. The question is, where does it get to? I mean, if you look at this as a line of consolidation, we are already kind of like, it's there. Right? If that's your line, if you're playing connect the dots this way. Now, if you were playing connect the dots like this, a little bit more room. I would love to see us get through here, come back down, higher, low, great reversal there. I'm still in my, if you look back here, we had the same thing. Line of consolidation, got through it, and it didn't hold for the reversal. Right? It didn't hold for the reversal. So when we hedged there, we were glad we did. But I would say that I'm going to look for this right here. Give me 4. We're not going to have a good hike in ASHI yet. We're going to be at least another day away from that. Yeah, one more day. If we got another good day, and then you can see it looks very similar to this. And then you got 1, 2, 3. On day 3, I would definitely start tightening my stops up even more so. And then that's the end of the road. Now you can see last time the 4-hour worked well for this consolidation. And so if you were thinking about tightening your stops, as Bill said, this is a good perspective to get close but not too close. Stop would be around like 365.25. You're still $5 under the current price on the SPY. You're still 5 is what, 1.5% almost. So I like that, because I do think that this is if we're trying to catch this again, that's a nice looking perspective right there. Hopefully that helps. Let me know if you have any questions about that. Let me get out of the Hoikeneshi. I'm always tempted to call them Heineken-Ashi. The Heineken-Ashi candles. Okay, what else? What else is cracking here? Did this update? Let's see. No, there's nothing there. Tomorrow, jobless claims. No expectation of anything different yet. But we're certainly keeping our eyes open on labor market data to see if at any point that's the huge contributing factor for what strength we have right now is the labor market. And so if we lose that, that certainly will damper our whatever it is we think it is. Okay. What else do we have? After that, we've got some GDP, some more Fed speak, and then Friday's loaded. Friday's got some inflationary data, some spending data, some income data. Quite a bit going on that front. Let's look at the predictions. We saw this earlier. Stella loves it. It's only a C grade, but it's showing a nice bullish bounce from where we are now. So that's important. For anyone who is thinking about a bounce, but you'll notice 1, 2, 3, 4 days. If it got a little more, yeah, but most of it is the first 4 days. So be thinking about that and keeping that in mind. What's next? QQQ. Bullish. I mean, it's not just bullish. It's quite a, I mean, look, this is what's interesting to me, right? And this is where I like having the objectivity of a mathematical model. The model sees all of this that we've seen, and it's still saying this. It's picking up on something that says there was weakness here in the sellers, and it's now turning into projected strength for the buyers. Whether that comes true will remain to be seen, but certainly that's something we're considering on the horizon. Let's look at IWM. I'm going in order of bullishness because all three of these are very, very similar. And then we have the Dow, and the Dow is where the lagging is, but from a major market analysis standpoint, the Dow is the one we would expect to lag if there were a bullish push forward. So, okay. Again, this bounce coming out of September lows, that's something that we have seen from a cyclical standpoint. So more fuel for the potential fire. Now, am I saying that's it? It's going to reverse? No, I'm saying certainly if it's going to, this is what it's going to look like. We want to be ready if it does. However, what would I want to see? I'd want to see this pattern. Let me change my color. I like happy green colors. Whether it's there or there, when it goes up, higher, low, or if it goes up, higher, higher, low, something along those lines, that's going to be important for us. Again, there's the heat map. Apple just kind of struggling, and I don't love that. Nice to see Microsoft picking up a little bit, but Apple is struggling. Let's get a quiz. Let's get a quiz. All right, you bulls. I'm gonna make it easy for the bulls. That's what you need. Is it gonna stay above 370 and hold on to these highs? That's your question. Then I'm gonna give the neutrals $1. $1 range. B is it stays near the high but can't hold the highs. And C's, you think it's going to drop back down. A, B, C. Give me your answers. Dennis is a B. Kent is a C. Says the sellers are coming in to close this thing down. LK is a B. Says we're going to drop, but we're going to not drop too far. Bill says I need an A. Okay, let's go A for Bill. Bill says A. With a little bit of wishful prognostication. Fair enough. Come on, I need more. How many of us are here? Oh, the numbers are not huge. Everyone's taking a break, right? As we're looking to see things happening. I'm gonna go with Bill. I'm gonna go A. I think we're gonna hold on. We might test 370 and then bounce. Let's go see. Oh, I didn't mean to do that. I think we all know 369 by 370. Let's see what Stella says. Stella wants to weigh in. Let's go 1 day, 1 hour. See? I think Stella agrees with us, Bill. It's going to come down. It's going to hold at 370, and then it's going to bounce on up and finish at 371.09. There it is. I think it. Bill thinks it. Stella thinks it. Clearly, that is what's going to happen. Maybe, unless it doesn't. Unless it doesn't. Okay, we've got the quiz done. We've gone through everything. Let's look at the VIX. Woo! So we tested these highs. 35 is kind of that mark, right? We got a little above it there, but really 35, 35, 35, 35. We hit 35. John's a C. John's a C. Okay, so what do we think is going to happen here? We think it's likely going to start a little bit of a retracement. I'm not going to be at all shocked if that's all we get right there. Anyone agree with me? 27.5, old resistance, new support. It's more of a psychological level, right? But if that's what happens and then we turn off of it, LK, that is when I'm going to really look to put on, and in this case, I don't know that I would call it even a hedge necessarily, because I wouldn't have enough bullish. And I know that whatever bullish I had, if I get those days down, I'm going to take a good chunk of profits, not half, probably 70%. Tighten up the stop on the last bit of it just in case. and then see what happens. Now we're hedging in case the proverbial shit hits the fan. That's what we're wondering. Does it ever pop up here? We haven't seen that in quite a while, right? We have not seen a significant spike as such in quite a while. Bing, bing. So this is right. I mean, if you look, this takes us all the way back here to January. I mean, one day was above there, but I'm not going to count that. I'm still going to say 35. Same thing here. Like since the pandemic, yes, we tested into the low 40s, but for literally a day or two, and that was it. Like it was like by the end of the day, it was right back down. Same thing. One day, by the end of the day, it was right back down. So this 35 level is pretty solid. It's going to take a lot to smash through there. Well, I guess that was more like 37 and a half, but okay. Yeah, I don't know that I'm overly concerned about that, but I want to be ready for it. At the same time, though, this is the exact kind of setup that leads to this little pattern here, where we go from this high to a lower high, like there, like there, like there. Those are excellent to trade, right? Excellent. Let me illustrate for anybody who hasn't seen. Right? So where does that put your entry when you look at that higher low? It puts you entering in here. It puts you entering in here, and it puts you entering in here with a secondary position there. Yeah, right? Do they always last long? This was only one move. And then it just sort of never, now it didn't at least sucker us in because it dropped so hard and fast that we did nothing, right? There was no need. That was a tough one to find a good hedge point on. But the rest of those are good looking trades. And then we continued to get additional signals there, and even there. When I move this back to the VIX, what are you going to see? You're going to see additional lower highs. Here it did it. Here it did it. Kept on coming down. Yes? So if you're not looking at the VIX daily, assessing the highs, the lows, the trend, I think you're missing out on really valuable information. I would absolutely recommend you add VIX analysis into the daily. So right now, what? I think there's a good chance that we have additional bullishness. That's what the model thinks. That's what the weekly or the cyclical chart thinks. Lost my train of thought. There's a lot there, but again, we're thinking it might only be 2-3 days. And if it does that and then it stalls at 27 and then turns, then my concern, why I'm getting those puts, is I'm concerned that we will at least retest the old high, possibly even get to that high 30, low 40 area where things are a little nastier. Or it goes up a little bit, rolls over. Whatever bearish trade I had on, I take it off on the lower high. The lower high definitely would end the hedges for me. Boom, done. I'm done with them. And then look for, this down to here-ish, where now we're getting bullish moves, and we look for hopefully this to continue on to the end of the year. Give us a nice bullish close. Why would we think there may be a bullish last 3 months of the year, you're wondering? And my answer is the cyclical chart. Like we said, low there, and then it goes into this series of higher highs and higher lows, and it trends up, and that's very much a pattern that we see the market tend to make. So no reason not to expect that. Yeah? Okay. Give me your comments. Give me your questions. Let me know how you're feeling. And then we'll go into our watch list now. John agrees. Add one more to the pile. Add one more to the pile. Okay, so let's look at all our bullishness here and decide, is there something here that we believe is worth a trade? Alcoa recession. Kent said, well, I mean, we're in it, right? Kent, we're in a recession. Well, I don't know. Okay, let me take that back. I don't know if the official committee to declare, I do declare, if the committee has declared that there's a recession. We have had 2 consecutive quarters of negative economic output, which that is what I was raised on in the market as a technical definition of a recession. But apparently the actual recessionary environment is the I want to apply to be on the committee. Like, what are the credentials you need? I'm pretty good at seeing bear markets. I've got a good, well-defined market posture process, and I would like to be on the committee. I'm gonna send an email requesting a tryout. Is it a tryout? I don't know. An interview? Yes. Ken says, they will raise interest rates 2 more times. Well, only 2, because there's only 2 more meetings. But it's how much? So if we can get a little ease on inflationary data, it might give the Fed the window it needs to taper off the interest rate hikes, so that maybe we see a 0.5 point in November, and then another 0.5 or even a 1/4 point. It's so funny that, like, 6 months ago, we're like, are they gonna do something outrageous and do a 0.5 point? Now we're like, are they gonna ease off and give us a 0.5 point? If jobs hang on through the end of the year. So far, so good. I mean, that's one thing that there has not been even a smidgen, not a smidgen, not an iota, not even a fraction of weakness yet. That's our main vestibule of hope, is the jobs market. So you're right. If jobs hang on and some inflationary data eases and the Fed can ease up on the interest rates, yeah, let's see it, man. Why not? Yes. Oh, it's a good discussion today. I like where we're going with this, right? But at the end of the day, remember this: regardless of economic data, regardless of anything else, right now the institutions are sitting on big piles of cash. They are Scrooge McDucking their money right now. They're swimming around in it and splashing each other with it, but they're not investing it right now. It's still coming in every week. More money coming in because of the jobs market, right? The money's coming in, but they're just like, well, 10% is a pretty broad benchmark for the amount of cash that an institution can sit on. And usually I would say they're around 2 to 3 at any given time. So even with all the money they've been getting, are they getting close and having to start putting a little bit of money in? Maybe some of them are, but they do have to eventually. They can't just be like, you know what, we're just going to keep sitting on this cash. Like, what do you mean? You're an investment manager. You can't just sit in cash. That's not how it works. I'm willing to buy puts. My market posture is more bearish than not. So as we talk about, like, oh, there may be a bull rally, I won't be convinced of it until I see a higher low on the market and a lower high on the VIX. That alone is enough to inject 2 points into my analysis. That brings me back to neutral at least. And I don't need to be bullish on my posture to trade bullishly. I need to see improvement in market conditions. I need to see signals that indicate now we have the ability to go through it. Institutions may be moving big monies for quarter ending. LK said we have quarter ending tomorrow and Friday. And then we move into Q4 next month. Yeah, I love it, man. Such good discussion today. Love it. Such smart people coming to this room. Alcoa. I'm not really feeling it from basic materials. If I'm gonna go counter trend, I'll probably pick something different than that. Apple. So Apple, look at Apple all of a sudden. I mean, if you ever wonder why I say it's a long day so much, this is why. Because this was our support level. And earlier today, it looked like this. Like, oh man, the sky is falling for Apple. And then all of a sudden, at the end of the day, where are we? Right back at that level, holding support. Had a put on Apple and sold it early, but still made. That's a good move, Kent. That's a good move. Holding on to it now, all of a sudden, this looks like a damn hammer, right? Looks like it wants to hammer out the bottom and gain a little. This is my line of consolidation for Apple as it stands now. Approximately, right? I mean, you could change the angle slightly if you wanted to go shadows more than bodies. For me to really believe in the market better and to believe in Apple better, I needed to break the consolidation and then hold above it. And really, I'd like to see it hold above this. That's what I need. If I see that right there, I'm in. And I feel better about the market making a bullish move because quite obviously, Apple has to participate. The NASDAQ is unlikely to move without Apple. The market is unlikely to move without the NASDAQ. You get the picture, right? Okay. Is that worth trading now, though? I don't know. The chips, same thing, man. I really feel like the NASDAQ's going to have a hard time moving if chips can't get their act together. Get it together, chips. Figure it out. Chips are everywhere in everything, but for whatever reason, it just can't seem to find any market love. But let's keep an eye on it because same thing. I want to trade. I mean, look what ADI does when it starts to recover. Line of consolidation. Break it, pull back, boom, higher low. What happened after that, you ask? Well, let me show you. Bam, it made that move. So what am I thinking now? Line of consolidation, pop above it, pull back, hold, trade. Higher low, let's go. Let's go. China needs to stop threatening invading Taiwan. That would help. That would certainly help. I agree. So do we look at SPY October 31s around the end of the week? I don't think they'd be that much, John. If we drop back to 27.5, that should ease that up a little bit. But yeah, probably something around those lines. Maybe not the end of this week, but early next week. I think we certainly have to be ready for that, right? Without a doubt. So that's ADI. It's looking all right, right? Archer Daniels, no, I don't know. AMD, a lot of work to be done. I don't know, maybe financials, maybe American Express gives us something. I kind of feel like putting one bullish trade on today. I'm going to put a few up for nomination. Right now, if we do it, we're going to do it with a tight stop. And we're going to adjust the stop until the trade is over. But something like this, yes, it's a lower low, but it is holding this old support level. So I think, is there a chance we could bounce? Yeah, I do. Boeing. So again, a lot of these look good, but I'm always going to come back to this. Where's my line of consolidation? I need to break that. If I move up and then all of a sudden I get here and it starts to stall out and turn over, well, then I'm like, I think we're heading back down here towards 113, 115, right down in this area. So we are in a downtrend. If you are counter trend, if you take any of these trades. It is a counter trend trade. And earlier this morning, Bob says, I thought you said you never counter trend trade. I said, no. Certainly, I tend to steer people into trend trading. Sorry, not trend trading, trading with the trend. Different things, right? Trading with the trend is just making sure you're bullish when the trend is bullish and vice versa. I'm not trend trading, meaning I'm going to buy in and ride it for as long as the trend stays. Okay, what else? Baba, I don't like the Chinese stocks. Bank of America. So it's Bank of America or AXP. Those are a couple from financials. Look at Bed Bath & Beyond right before earnings. I don't know about that. Caterpillar, pretty strong, but I don't know. Industrials, 3.5%. That's pretty good. Oil's trying to make a move. Costco, continuing. DBC, John Deere. Oh, Bob is here. Hi, Bob. Bob didn't say hi to me today. Hurt my feelings. I'm just going to put it out there. You guys know I'm sensitive like that. I'm sensitive. I'm a caring, sensitive guy. I'm known for that. Disney. Ooh, this is a... oh, okay. I remember now. This is a double gold star. You're like, what does that even mean? It means whatever you want it to mean. But it's a double gold star to whoever gives me this candlestick pattern right here. Double gold star. I know everybody wants this. They're all like racking their brains. What is it? What is it? Anybody want to take a stab at it? Abandoned baby. No, not an abandoned baby. This is an abandoned baby. Gapped up. Didn't do much. Gapped back down. Bing, bing, bing. Abandoned baby. Same range, but down one, up on the next. Can't. Yes. This is actually a tweezer hold. Tweezer hold. Obviously, the implications are that it's holding for the potential of a bounce. Tweezer hold. Exciting, right? You guys would be amazed how much people love my candlestick trivia at parties. They love it. They don't. I don't even go to parties. I just stay home. Fake news. You made that up. Oh, let's keep going. But it is a tweezer hole. It's very exciting. John said I'm a nerd. I'm a candlestick nerd, a trading nerd. I'm like, does anybody want to talk about implied volatility? That's the party I want to go to, because those are people that are making money probably. No, okay, man, I'll tell you what. FXI, you can see what you're up against, right? Put it on a trade now. What you're God, look at that. Small caps are just wanting to smash their way back in. Jets, Jets, Jets. Any New York fans? Meta, no. Marvell. Okay, so I'm kind of thinking maybe a chip stock, maybe a financial stock. Chips or financials? Give me your thoughts. Weigh in on it. So like Marvell or Nvidia or AXP, BAC, something along those lines. Microsoft is trying to hold on a little bit. Does anything give us like a nice Heiken-Ashi? So I am one day away. So my thought on a bullish trade is this. I'm trading it now with a stop loss just under these lows. And I don't necessarily mean Microsoft. I mean whatever stock we choose. just under these lows with the thought that if we get another bullish day, we immediately move that stop up the next day and then the next day. And on the third day, we transition to a 4-hour candle. I'm telling you this because, well, I mean, I guess we would talk on Friday, but then not again until Wednesday. After the second day, then at that point, I'm going to move it to a 4-hour and start tightening throughout the day and looking to take some profits. Is it the same as a tweezer top? That's a good question. Let me, I believe it would be, I thought it was a tweezer hold either direction. Again, I haven't studied candles in like 15 years. Okay, tweezer bottom, tweezer bottom, tweezer. Okay, so it says tweezer top, and then it says tweezer bottom, tweezer bottom. Maybe I'm wrong. Maybe the tweezer has to have shadows. I've never learned it with shadows. I mean, at the end of the day, the implications are the same. I laugh because I actually am not very strict when it comes to candlestick definitions, to be perfectly honest with you. There you go. It looks tweezerish enough for me. Microsoft, Netflix. I don't know. What do you think? Netflix was the one we were looking at. Already moving a little bit. Is Netflix going to break 250 and head on up? It's got a lot of room to get back to these low to mid 300s, right? Netflix, Neo. Let me get out of these candles, back to these candles. Neo, Nvidia. I mean, the chips look like, you can see it slowing down. Do we see something try to smash? Maybe so. I only got one person weigh in and said chips. So as of now, I'm going to say Marvell or Nvidia. There's the Qs. There's Starbucks. Look at Starbucks. Starbucks actually might have Heikin-Ashi candles already, or at least close. It was close. SLV, silver, semiconductors. You could go with the ETF, but I think I'd be more inclined to go Nvidia or Marvell. Marvell's volume is 10 million-ish. Nvidia's volume is probably more like 15, I would think. Oh gosh, I'm way off. Nvidia is like 60 million. Woo, goodness. Good, my goodness. There's the SPY, up 2.37%. Bill, Scott, and Stella are looking poised to win a beautiful gold medal today. Vlad uses XLK. See, I mean, XLK and QQQ for me are pretty interchangeable, but I do like the volume better on QQQ and the options better personally, personal preference. Tesla looks okay and actually probably has a Heikin-Ashi. So that would allow you to at least set a tighter stop. UNG, Visa. Here's the VIX coming on down. Look at that VIX. Look at that range today. My goodness. XLP, discretionary, way down. XLU, utilities, also way down. Here's XLK, and you'll see why. So this is XLK, QQQ. XLK, QQQ. I mean, nearly identical, right? If I covered the top, you wouldn't know which one is which. PBF. PBF. PBF Energy. Ooh, look at that. That is nice. Yeah. Okay. Okay. That's our list. Marvell, NVIDIA. That's not NVIDIA. That's NVIDIA. Marvell or NVIDIA? Let's see if Stella has a preference. We'll look to take a little bit of a speculative trade, maybe a little less risk than we maybe normally do. NVIDIA. Neutral. Iffy. Iffy. Marvell. A little stronger. All right, let's do it. Marvell it is. Okay, so what do we think? Maybe get back up to 50. Stop loss right on the other side. 42.50. I mean, it's only a 2-to-1, right? 2-to-1 meets the rules, but we are going to aggressively tighten stops. Look at the last time I considered a trade on Marvell, it was at $100 a share. Actually, probably like 97, something like that. Okay, what do we say? 50 on one side, and we said 42.50 on the other side. And implied volatility is actually kind of high and dropping. So I think I want to do a spread of some kind, maybe like maybe even like a 45.50 bull call spread. I don't have to go that far out though. So I am negative theta here. No, I don't think I like that much. Let's go 3 points wide, 45 by 48. Let's get to today. So this is a trade that I would not be in past Friday unless it's working. It's got to be probably above 46.5. As it stands, you can see I am getting 2-to-1, 400 to 900, a little better. And I would say, maybe just like 4 contracts. We usually keep our risk around 200, maybe a little less. Yeah. Oops. Yes. That's in October. Vertical spread. And we're buying 45s and we're selling 48s. Market current price 128. I'm going to leave it at 126. Let's see if we can't get a fill here in the next 5 minutes. Did I miss anything? Was there anything I needed to talk about that we didn't talk about? Give me your thoughts on that. Yeah, so we're a little bit of a speculative trade to see if we catch a bump. If not, we'll tighten our stop fairly quickly. In fact, let's talk about that. Realistically speaking, there is a very good chance that our next candle starts here. Where are we now? 44.74. Yeah. So the next candle is going to look like this right here. It's not going to be red. It's going to be black. And it's going to come up here, and it's going to go probably like this tomorrow. If I see that, I will definitely move my stop up. 43.63, I would probably say 43.40, right underneath there. 43.45, something along those lines. If I move my stop to 43.45 for as of tomorrow for Friday. Oh, shoot, I need that back. That takes our risk almost in half. And like I said, at that point, the only way I'm going to stay in it over the weekend is if it breaks 46.5. And I would then move my stop loss most likely. Will I be able to do this again? Up here to, depending on how high it gets, somewhere between 44 and 45 for the weekend. So that would mean my risk is somewhere between $40 and break even. Yes. Not filled yet. No. Anybody get filled on that? I'm going to try 127. I did get filled. Oh, yeah. Yes. Kent also got filled at 127. 127. Yeah, it's worth trying for a second, but I might have missed it moving my order, but I got 120. Oh, there it is, 127. 127, close. We'll take it. 127. All right. My stop as of right now, I'm not going to let this thing now. It's not going to be a hard stop in the morning, right? I'm not going to ever stop out of a spread in the morning, but the stop level that I'm looking at is what stock are we on? Marvell. What is going on? 42.50, I believe. Sorry, I believe does that sound right? 42.50. 42.50, and then go from there. So, yeah, okay. Well, it was a long day, turned into a long bullish day. Let's see if indeed the A's are the winners of today's extra large gold medal. It's extra large today. If it trades below 42.50, you sell the spread. You got it. Work your way out. That's exactly right. That is exactly right. Let's go to the 5-minute chart. And what was the numbers again? Oh, it's 369 by 370, right? 370 was the number? Yes. Well, it gave back a chunk right at the end, but still above 370. So, A's. Yeah, congratulations, you smarts. Well done. Everybody else, try harder next week because we only get one afternoon a week together. Just, makes me sad, makes my heart hurt a little bit. I miss you guys. I'll be back Friday morning. Coffee in hand with bells on, ready to go. Let's have some. It was good discussion today. I like where we went with the discussion today. So I will look forward to that. And see you guys then. As always, happy trading.